Trump's big, beautiful bill blocks all 50 states from regulating AI for a decade, consolidates authority at the federal level, and mandates the integration of AI into major federal agencies. Well, U.S. factory activity and manufacturing is now concentrated for a third consecutive month. That's the definition of a manufacturing recession. The three straight months in the red zone below 50 confirm that the U.S. manufacturing is, in fact, in a recession. It's not just a blip. It also tells us that a broader slowdown in demand and output is well underway. Moreover, input costs are rising. There's not just a slowdown of domestic production, but it's also in global trade flows. This is what it means for the stock markets. Equity companies with manufacturing exposure, the industrial sector will face margin compression. All right. Lower earnings and therefore stock price weakness. Okay. This is exactly what we've been warning about. Global trade is retreating and demand is dropping. U.S. economy is rapidly losing momentum. Well, let's talk about, is the dollar really in jeopardy? You're daggone right it is. It's happened time and time and time again. We've gone over that. 89 examples of failed currencies on my tables over there. We showed many times before. Good morning, though. Today we're tackling a question that has been in many minds lately: is the U.S. dollar really in jeopardy? And more intriguingly, how will silver play a role in this complex financial scenario? For decades, the U.S. dollar has been the world's dominant currency. It's the go-to reserve currency used in global trade and trusted by nations and investors alike. But we're seeing cracks in the foundation of the dollar supremacy. The question is, how much longer will this last? Well, let's start by addressing the growing concerns about the dollar's future. The U.S. government's staggering national debt, which exceeds $31 trillion, has sparked significant anxiety. This debt is only growing as interest rates rise. The cost of servicing that debt increases as well, which causes more problems as far as the amount of the percentage of that we're paying on servicing our debt versus how much are we paying to actually provide security for our country. We're violating the Ferguson Law right now. What does this all mean? Well, the United States is essentially printing money to keep the economy moving, but as more money enters the system, it creates inflationary pressures. Well, right, because you're watering nothing into the economy, so it's going to take more and more work to get the same number of currency units. Inflation, especially in times of uncertainty, dilutes the purchasing power of fiat currencies like the dollar. We've seen it firsthand with rising costs on everyday goods from gas to groceries. The more dollars that are printed, the less it buys. That makes sense, doesn't it? The devaluation could eventually trigger a crisis of confidence among global investors and foreign governments in the dollar stability. In fact, we're already starting to see signs of a shift away from the dollar. Countries like China, Russia, Brazil have started making moves to reduce their dependence on the dollar, engaging in direct currency swaps and exploring new trade agreements outside the dollar. We're witnessing the beginning of what's known as de-dollarization. You heard that term before? A trend where other currencies like the Chinese yuan or even gold are beginning to take center stage. This growing trend of de-dollarization raises a serious question. Could we be witnessing the end of the dollar's global dominance? Now let's zoom in on the question of how silver fits into this picture. While the dollar faces these challenges, precious metals, especially silver, could play a crucial role in preserving wealth and stability. Historically, silver has been recognized as a store of value. Just like gold, silver has stood the test of time. It isn't subject to the whims of central banks or government policies. When paper money loses value, precious metals like silver tend to rise in value. This is why, in times of economic turmoil, investors flock to gold and silver. They're tangible assets with inherent value, unlike the dollar, which is backed solely by the full faith and credit of the U.S. government. We covered that yesterday. But in silver, particularly, this has a unique position in the unfolding scenario. Let me explain why. For silver's first industrial use, as a major factor, unlike gold, which is primary source of value, silver is heavily used in industries such as electronics, solar energy, and medicine. With the growing demand for green technologies like solar panels, which require silver in their production, the demand for silver is likely to keep increasing. This creates a fundamental supply-demand imbalance that can drive silver's price upward, especially if the dollar continues to falter. Secondly, we can't ignore the historical role that silver has played in the financial system. Silver was once part of the financial system, using coins as a store of wealth in times of crisis. Even today, central banks still hold silver reserves. While it's not in the spotlight like gold, silver has the potential to see a resurgence as a hedge against inflation and a means of diversifying away from fiat currencies. So how exactly could silver play a role as the dollar faces increasing pressure? Well, if we continue down this path of rising debt and inflation, more people are going to look for a safe haven, something they can hold in their hands, something that isn't subject to the whims of central banks and the Bank for International Settlements. The silver could be that hedge. As the value of the dollar continues to erode, silver may increasingly become a go-to asset for investors seeking stability, the smart ones. But there's another key factor, the dollar's relationship with gold. The gold to silver ratio, which tells us how much silver it takes to equal the value of just 1 ounce of gold, has been historically high. That means relative to gold, silver is undervalued. If the dollar continues to lose its global position, silver could gain momentum and even become more of a safe haven asset. So we have to remember that silver comes out of the ground at a ratio of 7.1 units of silver to 1 unit of gold. Then why is it paper price almost 100 to 1? So let's keep moving. Furthermore, there's a growing trend in the precious metals market where individuals are moving their investments from paper assets to tangible ones, and silver is a key part of the shift. The physical demand for silver is increasing as people seek to safeguard their wealth from the risk posed by fiat currencies, fake currencies, where the government says this is money, where in fact it is not. This is money. This is money. Digits on a computer screen or not. Finally, let's think about the future. If the dollar's dominance continues to wane, we might see a shift in how people think about money altogether. Digital currencies, such as cryptocurrencies, even gold-backed assets could play a role. But in times of uncertainty, people may look to silver as a trusted, tangible asset. Whether it's stored in coins, bars, or part of an investment asset strategy, silver's role as a financial safeguard will become likely more pronounced. Let's make sure the silver we're holding is as fungible as possible. We don't want any unique bars like, SD Bullion's offering some kind of lunar series. Who's familiar with that? You need coins that people are going to recognize. You can use it in money rather than sell it back to the place you bought it for 22% less than what it is you paid for it. And that's what one of them are doing. They'll offer 78% of what it is you paid for their stuff. You want to hold the coins around. Don't look to do business with them again. Let them earn it once the first time. But have they really earned it? When you do business with one of these, are the people that you're dealing with, are they licensed, insured, they bonded? Hell no. Have you even asked? Heck no, you haven't. This is not the way it's supposed to go, folks. With estate planning and retirement planning, you get your fingers on assets like this, you need to be licensed, insured, and bonded. And that's not happening right now in the precious metals market. A lot of you guys are just taking the whims of a person that has no training whatsoever, and admittedly so, according to Lily yesterday. They don't have any training, just how to sell you stuff that benefits them more than you. What we want you to do is hold the coin of the realm, hold it in your own possession. So is the dollar really in jeopardy? While it's hard to predict exactly what the future holds, the warning signs are clear. Rising debt, inflation, and the ongoing trend of de-dollarization are all clear signals that we need to be aware of. The dollar's future isn't guaranteed. And silver? Well, silver could become the more important as ever as a way to preserve the wealth, and it is. Protect against inflation, hedge against the decline of the dollar. These dimes and these coins that we're talking about, they've been around before you were born. Chances are your parents use these same dimes to go out and buy your groceries. They have utility. It's not just a store of value, it's a tool for financial security in a world that's growing increasingly uncertain. So thanks for joining me this morning. As always, be sure to subscribe and stay tuned for more insights on how to protect and grow your wealth. Until next time, tomorrow morning, we'll be back again, but we have a whole lot more luggage to unpack. Let's get going. I think we get to know our politicians a little bit better. European royals killing naked children for a run at human trafficking hunting parties. This is one in a series of articles taken from eyewitness testimony before the International Common Law Court of Justice in Brussels. 5 international judges are examining evidence of child rape, torture, murder, and kidnapping allegedly done by the global elite.
I said this on the House floor. You know it's a good bill because the left hates it. And the left hates it because it has core common sense Republican principles in it. It cuts taxes. It secures the border. It says if you're an able-bodied adult and you're getting welfare, you're going to have to work. And it says to moms and dads, we got school choice in here. So we know you are the best one to pick where your son or daughter is going to get the best education. 4 key Republican common sense conservative principles. That's why the left doesn't like it. That's why it's good legislation.
Let's put on our thinking caps here, folks. Ask yourself these 2 simple questions. Why are foreign military personnel saluting Trump? And why is he returning the salute? Does that get you thinking a little bit?
Americans are getting lazy. Too many holidays. Too much Netflix. Not enough work. You wonder why the country's slipping? Because half the nation thinks self-care means staying home on government checks. When I was in charge, we worked. We won. Now it's Mental Health Monday.
Nothing stops this train. Mac guru Lynn Alden warns Fed has no way to slow down debt growth in U.S. financial system. Macro expert Lynn Alden is issuing a dire warning, saying that the Federal Reserve has effectively lost control of the debt expansion in the United States. Speaking at the Bitcoin 2025 conference in Las Vegas, Alden explains how the Fed typically controls credit growth in the U.S. financial system. Last Friday, Jamie Dimon, the CEO of the Wall Street superbank JP Morgan, made this statement: "We will have a global restructuring. Take it to the bank." He did not say we might have, or could have, may have, or could have. He said we will have. Jamie Dimon's talk of global restructuring is the language of reset. Reset. It's a polite way of saying we're about to shut down the old system. It's already decided. The future's in place. Now we just wait for the trigger. He's admitting what we already know. This debt-based system is done. Take a look at this. In 1964, the minimum wage was 5.90% silver quarters. In 2022, 5.90% silver quarters would have a melt value of $23.34. We don't need minimum wages. We need to bring back sound money, not virtual toilet paper money. Amen.